For those of you just joining us, I'm just waiting for attendees to come onto the call. Okay, I think it's the rush has subsided, so I'll stop sharing. Right, good morning, everyone. Welcome to Thomas Westcott's latest webinar. It's good to have do another one of these. Obviously, the pace of our webinars has slowed since we did a shed load of them in the summer, sort of following the various advice from central government and the various support available. For those of you who don't know me, my name is Patrick Tigwell. I'm a general practice partner at the firm at the Exeter, but today from sunny Tiverton, I cover both offices. And I have the pleasure of being your host for this morning's webinar. Actually on that, we are sort of trialing this new time of 11 o'clock. Do let us know what you think. The previous webinars have been at 2 o'clock in the afternoon, but you might prefer that, you might prefer this, or even maybe a breakfast timed webinar. So do let us know. Obviously, it's been quite a busy couple of weeks. We have got a fair amount of ground to cover. Notably, we'll be covering the, as it said on the slide there, the winter economy plan. To paraphrase Game of Thrones, winter is coming, and it's obviously the Chancellor's attempts to get UK PLC through the winter into the sort of sunlit uplands of next March, April. We have a great batting lineup lined up for you today. In a minute, we'll hear from our head of tax, Mark Tibbert, who will be explaining more about the job support scheme, the successor you may know to the job retention scheme that's obviously ending at the end of this month. Following Mark, we have another tax partner, but this time from one of our Plymouth cousins, Ian Pring, with the natty background there, so full marks to him for that. And he'll be covering the other aspects of the winter economy plan, including the self-employed income support scheme, phase 3 and 4, things like VAT deferrals and this sort of thing. So that'll be great from him. But you know, we save the best till last on the webinars, and then following Ian, we have my Axminster colleague, Stuart Carrington, who heads up our leisure and tourism. So yeah, sorry, it's no laughing matter. He does, and he'll be talking to us about the VAT kind of aspects of the hospitality industry and the concessions there. I'd also like to welcome, you can't see her, but I'd like to welcome Elisa Freeman, who works in our marketing department, who's taken over the management of these webinars from Jamie Giles, our head of marketing. So she's also recording the webinar, and we'll sort of send a link to this recording to all attendees later. We've allowed about an hour for this, so there's lots of time for the speakers and for questions. If you haven't yet submitted a question when you registered, you still can on the Q&A, and we'll sort of attend to those at various points during the webinar. Please post anon if you want to remain anonymous. Do remember that we can't answer questions in exhaustive detail on the call, but we do sort of say that we'll kind of get back to any questions like that after the call, and so you get the answers you need. And if you get to the end of the webinar and you still need to ask a question, you still can on events@thomaswestcott.co.uk. So without further ado, I'll hand over to our head of tax, an all-round good egg, Mr. Mark Tibbert. Mark, over to you.
Thanks, Patrick. As Patrick said, I'm going to look to run through what we know so far about the job support scheme, which was announced at the end of September as part of the winter economic plan. And it's the successor to the job retention scheme, which is due to run out at the end of this month, with the last claims under that job retention scheme due to be submitted no later than the 30th of November. So the job support scheme, as we said, comes in and applies from the 1st of November 2020 and is due initially to run for 6 months. Everything that I'm going to run through at the moment, though, will apply at least for the first 3 months. What they have said is they will review it again after 3 months. They may increase, or they more likely than not, they'll decrease some of the support that is there. In terms of the scheme itself, there is no requirement to have made a claim under the old job retention scheme to be eligible for the job support scheme. So it could be that you're only starting to see some of the effects now, and not had to claim under furlough. So it gives you the opportunity there. As I said, it remains open until the 30th of April 21. And the other point, just to clarify, is that previously they'd announced a job retention bonus that was linked to the furlough scheme, which would provide a £1,000 bonus per employee, where you'd previously furloughed them and you'd managed to bring them back into work, into continuous employment between the 6th of November and the 5th of February. And so long as they were paid at least across that entire period, didn't matter whether it varies month on month, at least 1,560 gross, you'd be eligible to claim for that individual. Making a claim under JSS does not preclude you from claiming that job retention bonus. So you can still claim under both schemes. In terms of the JSS and what you'll need to claim, what they've said, although the portal to making claims is not open at this point in time, they have said that you will need to have a UK bank account. You'll need to have a UK PAYE scheme, so very much like the furlough scheme. And they've changed when you need to eligible employees. So under the furlough scheme, effectively they had to have been on an RTI submission at the end of February. To claim under the JSS, they need to have been on an RTI submission prior to the 23rd of September, which is the date this scheme was announced. And for all SME businesses, which are generally those that meet 2 out of the 3 following conditions in terms of turnover less than 25 million, less than 250 employees, and a gross assets of less than 12.5 million, so long as you meet those first 3 conditions, there is nothing else you need to do. You can claim under the scheme, assuming you meet the conditions I'll come into later on. However, if you breach those turnover, employee and gross assets limits, so you're classed as large, there are 2 other restrictions that they're bringing in. One is that you have to be able to demonstrate your turnover is lower than it was before all your COVID difficulties, and still is lower. And there is an expectation that you will not be making any capital distributions. Effectively, no dividends should be paid out to shareholders whilst you are claiming under the scheme. As I say, those restrictions only apply to large companies. In terms of how it works, it's very different to the furlough scheme in that under the old job retention scheme, it was so in later months, it's been that if they do any work, it just limits the claim. Under the job support scheme, it is there to encourage viable jobs to be retained. So you have to have your employee working for at least 1/3 of their usual hours. Their usual hours hasn't been confirmed yet. It's in guidance that we've been waiting for since the end of September. The indication, though, is that usual hours will be the same as under the furlough scheme. So it'll be, if you're on a fixed contract, you'll look at, well, how many hours would you have worked in that month? So if it's 36.5 hours, 36 hours, say, a week that you're contracted for, how many days are there in that month to give you what your usual hours, and you need to make sure your employee works those usual hours. For part-time employees or hourly paid staff, you would need to start looking back at the previous year's pay periods to see how many hours they worked in that period. It was covered. I did do a talk on this a few months ago when it first got announced for the furlough, which I believe the recording's still available. So I don't intend to go through the quite complex calculations around usual hours at this stage. There is also, as there has been with the furlough scheme, a requirement to ensure that you agree in writing what the reduced normal working hours will be with your employee. And HMRC have said that if they request that, they will expect it to be provided promptly. In addition, the reduced hours, to make a claim under the scheme, you have to apply it for a minimum of 7 days. You can go in and out of those shorter working hours, but each shorter working hour period has to be a minimum of 7 days. So it could be they work a third of their hours in 1 week in the month and work full time the rest of the month, or going 1 week full time, 1 week part time, etc. Once you've met that requirement that they're working at least a third of their hours, then you are paying them their normal hourly rate for those hours worked. For the hours not worked, then you as the employer have to pay at the normal rate a third of the hours not worked. And the government will give you a third of the hours not worked as a compensation payment to top up the employee's pay. That payment will be capped at $697.92 a month. Effectively, under the scheme, if an employee only works a third of their normal hours, then effectively they'll be getting roughly 78% of their normal pay, with the government contributing around about 22% of that. There is no, alongside this, as with the furlough payments under the last 2 or 3 months, the government will not make any contribution towards the employer's national insurance or the employer's pension, although this still has to be paid by you as the employer. And that employer's NIC and pension is based on the actual pay that is paid. So it will be also include the amount the government is funding. They have also indicated in their guidance there will be no ability for you as an employer to top up your employee's pay. So if they are only working a third of their hours, they will only be able to be paid equivalent to 78% of their normal pay. Whereas, which is a big difference to the furlough scheme, where you could, if you wanted to, always top them up so that they were getting their normal pay. In terms of the practicalities of how it works, under the job retention scheme, claims have been possible to be made in advance. So you work out what you're going to be claiming, you put the claim in, say 14 days before your actual payday, you get the money in your account, so you've got it there to subsidise the payment of wages. Under the job support scheme, you will have to make the payment to your employees before you can actually make a claim. The claim period can only ever be for a month. So if you're paying people weekly, you'll have to fund the entire month's pay before you can then actually make a claim. And it's always monthly in arrears. So although the scheme starts on the 1st of November, the first claim that can ever be made won't be until at least the 1st of December. We haven't yet had confirmation of when that claim portal will go live or how it will work. I imagine it will be very similar to the online claim system for the furlough scheme. One of the big differences as well under the job support scheme that differentiates it from the job retention scheme is if you are making a claim for an individual employee under the job support scheme, you cannot make that employee redundant whilst you are claiming, and you cannot put them on notice of redundancy whilst claiming under the scheme. So if you're looking at any redundancies, you need to make sure that those employees are not included in any job support scheme claims. And one point, I'm not sure how the revenue will do this, but they have indicated in their guidance notes that they will notify employees that a claim has been made in respect of them and how much has been claimed. How they will do that, we don't know. So just looking at some numbers as to how it works and what the cost might be to yourselves as employers. As I say, the minimum an individual has to work is at least 33% of their normal hours. So in this table, I've looked to show, well, what does that mean for the cost to you as an employer? If they work 33% of the normal hours, they're not working 67%. So a third of that 67%, effectively roughly 22%, the government will pay you. You also have to top up the 33% that you're paying them for working by the 22% to give you your sort of 55%, so that the employee is being paid 78%. It's the roundings between 22, it's 22 and a bit and 55 and a bit is why it doesn't quite total 78%. If you took it to a bit more of an extreme and worked through, and they do more hours than the absolute minimum under the scheme. So if they work, say 70% of their hours, then effectively the employee would be being paid 90% of their pay. The government would be contributing 10%, but from you as an employer, it would be costing you 80%. So there is a very real cost to you as an employer by claiming under the job support scheme if they're not working. It's not just a case of you're paying them for the hours they work, you are continuing to pay them quite a significant amount for non-working time. In terms of cash, if we look at it as a very simple example, so you've got someone that's on a normal monthly pay salary of £1,500 a month, and they normally work, say, 36 hours a week. If you reduce them down to working the minimum under the scheme, so 12 hours a week, a third of their normal hours, then of that £1,500 that you would historically have paid them, you will have to pay them £1,167, which is made up of £500 for the hours they work, £333 essentially you paying them for not working, and £330 that the government will reimburse you towards that. In addition to that, as I said, you've got the employer's national insurance and pension, which would be calculated on the 1,167 in that instance, which works out roughly at £79 for that month. If they worked 50% of their time, as you can see, the pay for the hours goes up to £750. The contribution from the government comes down. So your cost is marginally increased to £1,250, but you also have the employer's national insurance and pension on top of that, which slowly increases. The other part of the job support scheme, which depends upon what warning level you are and restriction level you are in the UK, subject to anything he might say today. If you're in medium risk, so tier 1 or tier 2, the job support scheme applies as it is here. If we ended up in the tier 3 lockdown and you're in one of the businesses that is forced to close because the government dictate that you have to, then the government will pay under the job support scheme 2/3 of your employees' salaries. Again, we don't believe there'll be any option then to top up, much like there is under the job support scheme. As I say, we're still waiting for some additional information and clarification on various points, but that was it from myself on the job support scheme based on what we know so far.
Thanks then, Mark. Just a couple of points then. I think it's important to just to sort of emphasise, isn't it? And I think your slides did a great job there of emphasising that it's the government element. It's not 1/3 of their gross wages, is it? It's 1/3 of the non-worked amount. So it's not like you pay the employee 1/3 because they're working 1/3 of their hours, and the government chips in 1/3 and everything else. It's 1/3 of the non-working hours. So yeah. So do pay attention to the slides that obviously that Mark's put on the screen there. I think also a couple of other points have come out. It's the fact that you can't top it up. So that was one of our questions actually that Mark's answered there. You can't top them up to the 100% of their normal wage. And just for clarification then, Mark, the government, you're saying obviously the employer NI is due on the sort of the bit that they're actually physically paid plus or goes through the payroll plus the employer's supporting payment plus the government supporting payment. But you can't claim, the government doesn't reimburse you for the NI on their bit, do they?
No, so effectively it is an entire cost to you, not just the gross pay to the employee. You've also got to factor in that you're paying the employer's national insurance and the pension, assuming, and the figures I went through are on the basis you're on the auto enrolment scheme, so you're making at least a 3% employer contribution.
Yeah. And I think just a couple of other things then. I've heard that obviously it's across all sectors, isn't it? You said all SMEs, and that's across all sectors, so it's not sector specific.
Yeah, that's correct.
That there is for businesses that have been mandated to close, I think there's a £2,100 a month sort of limit on that, isn't there? But and something I did forget to say in my sort of opening remarks is, as Mark alluded to there, that obviously the Chancellor is speaking today about Tier 2 additional measures, and so stay tuned, because obviously we will be doing another webinar at some point, possibly next week, to sort of update everybody on what's been said. It is a sort of a live moving target at the moment. But thanks very much, Mark. We'll move on to Ian now for everything else that's happened in the world apart from the job support scheme. So, so Ian, the floor is yours.
Thank you, Patrick. Well, everything apart from VAT, which Stuart's going to talk about, but I'm trying to pick up some of the other matters that were announced as part of the winter economy plan. So if I can just find my slides. And the first thing I'll pick up is the self-employed income support scheme. And this is, mirroring the job support scheme. It's been extended to run for another 6 months. If I go, take us back, we had the original Mark I scheme or grant that came in March for 3 months. That ability to claim under that grant ceased in July. It was worth up to £7,500 for the 3 months based on average profits from earlier years. The second grant, if you were eligible for it, you should have claimed it by midnight on Monday. It's closed on the 19th. That was at a lesser amount of a total of 6,570 for 3 months. That's the maximum. Obviously, could be less depending on average profits. And now we've got a new grant which has been announced to operate from 1st of November, again mirroring job support scheme, and aim to provide the sort of same level of support as under the job support scheme to self-employed individuals and partnerships. Cover, initially it's been announced in 2 phases. The first 3 months they've announced it's going to be worth up to a maximum of £1,875, a maximum of £625 per month, and it will be made up of 20% of the profits that are used for this purpose, and I'll come on to that. And the fourth grant, which will operate, or the second part of the third grant, if you like, that will be coming for February. But I think the government are keeping their powder dry. They're going to see what is needed, and they haven't announced the value of that grant yet. So that will be announced in due course. Now, in terms of this grant coming in from the 1st of November, eligibility is not exactly the same, but in terms of the profits that are used to calculate the grant are exactly the same as they were for the previous versions. You need to have, whilst you don't need to have claimed under the previous grants, you need to become self-employed by the 5th of April, filed a 2018-19 tax return by the 23rd of April. More than half of your total taxable income must come from self-employment in the 2018-19 year, or the average of the 3 years to the end of 2018-19. And your average trading profits must have been less than 50,000. So that's exactly the same as was before. Now, for the first two, the only thing that's subtly changed is under the first 2 grants, you had to declare that you've been adversely affected by the coronavirus pandemic. They've subtly changed the wording now to say that you're adversely impacted by reduced demand, and that you also need to declare during the period that you're actively trading and intend to continue to trade. So whether, if you have to temporarily close your business or choose to temporarily close your business during the qualifying period and don't reopen in the period, whether you'll be able to claim, we don't know yet. Hopefully that won't be the case. Again, the full details of this scheme and the criteria actively trading and impacted by reduced demand will be announced in due course. Obviously, this hasn't started yet. It's a grant for a full 3 months, so it's unlikely you'll be able to claim this grant until we get to February. So we'll watch that space on that one, and we'll keep you informed. We've also got a local council grant scheme coming back in, as we did for hospitality, leisure, etc. Several months ago. Now, if a business is a rate-paying business is forced to close by the restrictions, there are local grants available from your council that are being funded by government. The Winter Economy Plan announced more generous grants than had originally been announced on the 9th of September. If you're legally required to close to a nationally imposed local lockdown, it's now up to £3,000 a month. The previous announced amounts, you had to be closed for 3 weeks, and now it's only a closure for 2 weeks with a greater amount. And as you can see on the slide, depending on the rateable value of the business, the level of the grant is determined, and that's administered by the local council. Probably not affected here at the moment, but watch this space, and if you're eligible for the grants, they will be claimed via the local council. The original implementation of this grant scheme was just for local lockdown, but now it's been extended to businesses that have been forced to close on a national rather than a local basis. So that could be something like at nightclubs, which are closed across the country and not subject to local restrictions specifically. Over and above this rate-paying grant scheme, local councils are also being funded to give a discretionary grant to businesses that don't pay rates that are forced to close, and that, I think, grant is up to £1,500. And the other announcement was really, during the pandemic, we've had the ability to ring HMRC and say, look, we've got a July tax bill to pay, and we can't afford to pay it, or we want to defer it. And the revenue have been very good in deferring, but you have needed to contact the revenue, ring them up, get through the switchboard, etc. Now they're introducing, if you like, a self-serve time to pay scheme, which will allow you, where the tax owed is 30,000 or less, to basically just go online and request time to pay to defer your 31st of January, let's say, tax bill. So that could be your 31st of July 2020 payment on account that that's automatically been deferred to 31st of January, or the balancing payment and due for 1920 tax year, and indeed the first payment on account for the current year. So one can simply go online now and request a deferral for those payments to be deferred by a payment arrangement up to next 31st of January. There won't be any, as long as you do it this way, there won't be any penalties for late payment. Interest will accrue from 1st of February on the deferred payments. Obviously, there's no interest on what you've deferred until 31st of January in the first place. But there are a couple of criteria there. Your tax returns can't be outstanding, can't be any other debts, and you can't already have a plan set up. And note the last one there, you can do it after the due date, no later than 60 days. I think that's really all I was looking to pick up on. So those are my bits, the non-VAT bits that were announced in the Chancellor's announcement.
Okay. Yeah, thanks, then, Ian. So the two things there that really, as you said, are slightly different this time in the self-employed income support scheme. This impacted by reduced demand. So we're still awaiting guidance as to, well, I suppose that before it was just you had to show when you were claiming it online, you had to show that you've been impacted in some way, haven't you? But this is
that's right, because before it was they did helpfully provide guidance of what could constitute adversely affected. So you're shielding, you're self-isolating, your supply chain's interrupted, you've incurred extra costs on protective equipment, etc. So hopefully they will give us similar guidance in terms of what they mean with the new subtle changes to the wording. So impacted by reduced demand suggests that, similar to the job support scheme, it's based on turnover, it's based on income, rather than necessarily costs incurred. But we will wait and see on that one. Yeah,
because it could be whether, before I think you could claim, couldn't you, if your turnover had risen, but not risen by as much as it would have done if COVID hadn't been present. So,
well, yeah, who could say,
Yeah.
But the fact is, it would be very hard to think of a business that hadn't been affected in some way. When you're talking about because staff might be unable to come into work, contracts have been cancelled. Fewer customers out there. There are likely to be fewer customers out there for most businesses. It was very wide and broad. I suspect they'll trying to narrow the range of businesses that can claim.
Yeah,
And it's still unfortunately, we have the same criteria that require you to have been self-employed in 2018-19, because that's the only year that the revenue currently have records in for self-employed. So unfortunately, anybody starting after that date, still as before, there'll still be quite a few people or clients that fall outside of the support scheme.
Yeah, and it's not based then at all if you get your 1920 tax return in now. It doesn't. It still refers it back to the 1819.
It's still 1819 by 23rd of April this year.
Yeah.
So obviously they were concerned about fraud and people manipulating and amending returns to inflate profits. But yeah, there will be quite a few people who've taken up self-employment subsequent to 6th of April 2019, and unfortunately there's no support.
No, okay. And just one last thing then, the actively trading thing. We're still awaiting guidance as to what exactly that.
Yeah, again, it's literally the self-employed income support scheme extension is a one-page document that's been issued, and guidance is needed for that. What actively trading means. I mean, does it mean you can temporarily close your business and still be actively trading, or do you need the doors open?
Yes, because I mean, I have a client who's still in business, but he's hurt his wrist, so he can't actually physically work at the moment. The business is still kind of carrying on. Does that mean he's active? He's a sole trader. Is he actively trading or not? So,
well, yeah, I mean, there is a two-part and intend to continue to trade. Well, that's fine, but the actively trading, exactly. Do you have to be marketing yourself? Do you have to, or have you got to sign up saying close the business? Is that actively trading?
Yeah, okay, thank you. Thanks, Ian. We have had a question. I don't quite understand what Danny hydrid. It sounds like chemistry to me, and I was never good at chemistry at school. But is there particular support for those perhaps under the £1,500 per month, and part-timers in particular? So, I mean, Mark, do you want to field that one?
Yeah, I think it's going back to possibly one of the slides that I did. The £1,500 is obviously just an example, but if you're part-time, then the job support scheme and you're in employment and the employer takes advantage of it, is there to ensure that you still get some of your salary coming through, even though it might not be all of it. If your income is low enough, is such a level, then you can start to look at benefits, and the first one to look at would always be universal credit. Other than that, they haven't put any other additional reliefs out for anyone.
Okay. Thanks then, Mark. Now the main attraction. You've had the hors d'oeuvres and the starter. Now we've got the main course, which is Mr. Carrington and VAT with the hospitality industry. So, Stuart, over to you and any cats you have available.
There are no cats today, Patrick, but thank you. It's quite worrying to be called the main attraction, given that I actually have no slides or anything to sort of put in front of you in that way. Well, I'm finding this all a little bit strange. I mean, I've just realised that it was actually 7 months ago tomorrow that for the first time in more years than I care to count, I stopped wearing a tie. I never really thought back then that 7 months on, we'd still be in a situation where we're discussing support from central government for most of the economy. Now, not only have we still discussing it now, but we're looking at a situation where we've got at least another 5 months of support in place and possibly longer. I do have this great fear that in 12 months' time, we'll be sitting here discussing a second winter economy plan. I really hope not. But whatever we end up with, wherever it goes next, the VAT aspects, minor though they are, really recognise the particular problems facing the hospitality and tourism business. As a sector, it's probably been hit as hard as anything, with the possible exception of nightclubs. There's been this massive drop-off in activity. And what we've got is we have two schemes that were covered in the winter economy plan. Firstly, we have the reduced 5% VAT rate, now continues through till 31st of March 21. And then secondly, we have all those cases where people deferred their June 2020 VAT quarter liabilities. That's now been extended. Originally, that idea was that you could defer your June quarter and pay the liability next March. Well, what we've got instead is, instead of having to pay the whole lot 31st of March 21, you can now spread that over the following 11 months. Details of how to do that haven't yet been put up on the websites at the government, but they will be there apparently before 31st of March. I have no idea why we're going for 11 months, when 12 months seems to be easier to understand and in keeping with what's being done for self-assessment, as Ian mentioned. But it is 11 months and it should hopefully enable, if we can get through the winter, just there's not that cliff edge then facing us at the end of March. The 5% reduced VAT rate, that was originally announced back in July. So this is largely a recap. It was announced in July that it would run until 12th of January. Again, I have no idea, like 11 months, why we've gone for a 12th of January cut-off, but that was what was done. But that's now been extended, and this 5% rate runs on till 31st of March. Across Europe, there are many countries which have a lower VAT rate for tourism and hospitality. I've been involved in a completely ineffective campaign for the reduced rate for the UK for the last 10 years. Never thought it would come through, but this is where we've got to now. Obviously, hospitality businesses, food and alcohol for consumption, food and non-alcohol. Sorry, I've got this thing about alcohol at the moment. I've been locked down for too long. To be consumed on your premises, 5% instead of 20%. And presumably, to avoid a return to the pasty tax debate, that also applies to hot takeaways. Okay. Great scheme. Okay. Hotel and accommodation, likewise, 5% VAT rather than 20%. Now that actually also applies to camping, which I think rather stretches the idea of winter accommodation, but each to their own. And some attractions will also be able to charge 5% VAT rather than 20% on admission fees. Theatres, museums, zoos, such like. Many of you may think that museums are exempt from VAT on their entrance fees, and in some cases they are, but there are some very useful schemes that can be taken advantage of where you look to force a VAT registration. Now in those cases, we'd have been forcing them to pay 20%, but now it's 5%. So there are some opportunities there. Now, the idea of the 5% rate is that you don't have to pass that saving on to your customers. Now, if a coffee and croissant was £5, and I keep the maths very simple, I've never paid £5 for a coffee and croissant. You'd want at least 2 croissants for that, wouldn't you? But at 20% VAT, that was cost you £5 to your customer. And it can stay at £5 to your customer, even if it's only a 5% VAT rate. Now, instead of paying over 83 pence of that fiver to HMRC, you now only have to pay over 23 pence. So for every £1 spent by a customer, the scheme puts an extra 12 pence in the pocket of the business. Now, 12% extra, that's phenomenal. The margins on a lot of tourism hospitality businesses are remarkably small. Extra 12% can make a vast difference. But this is where the problem comes. It makes a vast difference if you're busy. If you have plenty of customers, then this is just free money effectively. But if you don't have any or many customers, then a reduced VAT rate has almost no advantage. They had the UK hospitality group talking on Radio 4 this morning, and apparently 1 in 4 hospitality businesses have yet to reopen. Well, that's 1 in 4 businesses which completely missed by this scheme. So perhaps we shouldn't be looking at it just as a possible VAT saving, but also wondering what the business implications are, what we could be thinking about differently to take advantage of this scheme in other ways. Now, one of those might be to think about passing some of that saving on to your customers. If by passing that saving on, you suddenly become busier, then that could be an advantage to you. More of an advantage than trying to operate with very few people coming through. Now, every business will be different on this. It will depend on how the elasticity of demand, to use an economic concept, how rapidly people change their purchasing habits depending on your pricing and also your costing structure overall. But that's something which is definitely worth investigating. Perhaps a discount scheme, perhaps using some other approach just to make your business more attractive and to get more people through the door to take advantage of this scheme. Now, I would even go as far as suggesting that there's probably only been one real benefit from COVID-19, and that's that we've all had to think more deeply about our businesses. What works, what doesn't, what we might want to change going forwards. And perhaps the VAT aspects are just another aspect of that. They're giving us something to think about rather than something to say, this is going to change our lives, change the way we run, get us through the winter. maybe it's just encouraging us to think a little bit more deeply. Accountants are very happy to help with any thoughts you might have on how to make your business more profitable. We're not just there for compliance, and we'd be very happy to discuss that with you going forwards. Anyway, I hope that this has been of some use to you, and fingers crossed, within the next 12 months, I will be wearing a tie again. Thank you.
Thank you, Stuart. Well, wonders will never cease, but some of us have to maintain the standards, obviously. Just a couple of questions then. I don't know, Stuart, you can take this one, or perhaps Ian. You both mentioned, obviously, about the deferral of VAT. The question is, does interest run? Does HMRC charge interest on those deferred payments?
My understanding is that on the VAT, there is no interest being charged.
Okay.
And on the other taxes, so on the self-assessment, income tax, etc., income tax, yes, interest will apply from 1st of February.
Okay.
Obviously, we haven't got interest on the tax that you've deferred up to January, but if you then choose to pay by instalments beyond that, interest is currently due to run in the normal way.
That's good to know. Yeah, a couple of things I would just mention, actually, that part of the winter economy plan was this pay as you grow. I don't think we've mentioned that yet. So this was just the Chancellor saying, well, the C bills and the B bills loans, the coronavirus business interruption loan scheme and the bounce back loans, they've been extended, I think, till the end of November for new applications. So it's not too late. You can approach your lenders or a broker to source that. And also they're saying, the Chancellor said, well, the repayment time was 6 years, now it's 10. So that's just, again, especially with the bounce back loans, and there could be a deferral of interest on that as well. So just look out for those. It's not too late to get your applications in. So, but a question we have asked, which is a little bit more general, so I've sort of saved it, towards the end now, really, is that, and any one of the panelists can take this, that we've been asked, well, have the changes come at the wrong time? So it's sort of, the measures don't, I think the thrust of the question is that the measures have sort of tapered off from that offered back in the summer under the SICE, under the job retention scheme. But then we seem to be heading towards more of a lockdown, especially kind of tier 3s and tier 2s. So what did the panel think of that? And second part of the chap's question here, Dan Stevens, is do we think we'll see a reversion back to a proper furlough as we saw earlier in the summer in 2021? So Mark, have a go at those.
Broad topics. Personally, I can't see that the government has any inclination or appetite to go back to the furlough scheme once it ceases at the end of this month.
You're a little quiet, Mark.
Sorry. I can't see that the government has any inclination to go back to the furlough scheme that runs out at the end of this month. And I can't see it coming back in either at any point next year. There could be an extended period under the job support scheme if we continue to remain under lockdown in certain areas. Given all the debate that's gone on, and obviously it's been widely publicised in the press with Liverpool, Manchester, and a lot of areas in the north, I don't see the government moving and increasing it beyond the 2/3 effective cap that they've put on it at the moment. It's just not viable from a finance point of view for the government. And it'll be looking for employers to find ways to work with potentially how they have to trade going forward.
Yeah. And Stuart, do you think that we'll kind of, there'll be more sector support perhaps for the hospitality industry? Okay, we've got the VAT reduction, haven't we? But actually targeted support that seemed to be missing from the Chancellor's statement, wasn't it? That, so what would your comments be on that?
I think it's very difficult to do targeted support. In that, how do you specify this particular industry is worse affected than this? You're coming into areas of value judgments then, and I think they'll probably go more for, and again, this is pure speculation, but I would expect there to be more support based on regional lockdowns. I don't think we'll see a wider range of sector specifics.
Yeah, so they'll go for the kind of the regional approach and maintain the whole tier system, won't they? Yeah. Ian, what would your comments be on where you think the future's going from now? Okay,
Well,
we might be kind of overtaken by events later on today.
Well, I would just reiterate what Mark said. You know, it's just not affordable to the government to carry, you know, as you've seen by the level of support going down through JRS and SEISS, you know, in terms of the quantum of the payments going down and down, the financials that came out the other day in terms of record borrowing and the hit on the exchequer, it's just the government can't afford to prop it up to the level they initially started for a prolonged term. So they have reduced the quantum, and exactly, they may well go to the local lockdown and the local regional grants through the councils. But I can't really see that they can, well, they couldn't carry on at the financial level of the original grants. No.
Okay. Oh, that's great. Okay. Well, I think we'll have to leave things there. I'd like to wrap things up now. If you'd still like to ask a question, as I said earlier, you still can. events@thomaswestcott.co.uk, and we will attend to all questions asked. Look out for our next webinar. Obviously, what the Chancellor's saying today could obviously impact on that. So that should be the next sort of couple of weeks, I suspect. And also we possibly might have an employment lawyer on that one as well, just to kind of give his or her take on how these new measures actually impact on you in an employment law situation. I'd like to thank our speakers today, sort of Mark, Ian and Stuart, and obviously Elisa again for sort of running the webinar. And also you are attendees. So it's I would say it's great to see you, but obviously all I can see are the faces of my fellow partners here. But so yeah, but it's great that you're on the call. Hopefully you got a lot out of it. Have a great rest of the week, and channeling my inner Ron Burgundy, as always, stay safe, Devon and Somerset. Cheers for now. Bye.